Good morning. Today I want to tell you about a shiny object in the investment world, opportunity zones. But before I do that, let me put it in a little context. Financial planning is ultimately about risk management. Anybody can go randomly pick an investment and hope it shoots to the stars. But financial planning is about the discipline of risk-adjusted return, whether it's your investments, protecting yourself with life, long-term care, disability insurance, or anything else in your financial world. Budgeting, for example. When we look at an investment, we try and determine the best return we can get with the least amount of risk. Same thing in your life. There's a balance between your home life, your work life, and every other aspect of your life. But what I want to tell you about is a shiny object, an opportunity in the investment world that's only going to be around for a few years. Does it mean everybody should do it? No. Does it mean you should do it? Maybe, maybe not. But the opportunity is there, and it's called an opportunity zone. It was created during the tax cuts of 2018. It's a geographical area. They're all over the country. In these zones, it's an investment in property, land with a house on it, raw land, or a business that's in this zone. And the intent of these zones are to stimulate investment, stimulate growth in underserved areas around the country. There's several areas right here in Wake County that are opportunity zones. How does that benefit you? If you've got money that you've invested in the past and it's gone up in value, for example, maybe you bought a house, a rental property, a business in the years past, or a stock or bond investment, and you sell it at any point between now and 2028 is the last time you can get into an opportunity zone. You sell that investment. For example, if you had $100,000 and you invested it and it grew to $200,000 and you sell it today, you have 6 months from today to invest it into an opportunity zone. You don't have to invest the entire $200,000. You only have to invest that $100,000 of gain. Now, if you do that now, in the next 6 months, then you can delay the tax until 2026, the end of 2026. At that point, you pay the capital gains tax, but you only pay 90% of it because you've held it for 5 years. Now, if you sell something in 2025, you're not going to have 5 years, so you're not going to get a discount on your capital gains. You will get to delay it 1 more year, though, which is also a benefit. But it's a huge benefit to say, all right, I'm going to take this gain today, that $100,000, and not have to pay, say, that 15% capital gains tax until 2026. That's a good thing. That's a nice nugget. That's a shiny object. But the real value is what happens in that investment. So let's say that I have this investment. I had previously invested $100,000. It grew to $200,000. I find an opportunity in this opportunity zone. Maybe it's a house on some acres. I'm hoping the land, the area is going to develop over the next 20, 30 years. And I take the $100,000 back, put it in my pocket that I originally invested, or go do something else with it. But that $100,000 again, I say, all right, here's a piece of land with an old house. I'm going to invest in this house out in this opportunity zone. Put your $100,000 into it, buy it, and if I hold it for 10 years, 2020 to 2030 or longer, all the way out to 2048 is the longest you can hold it, then 100% of the future capital gains are tax-free. That means that $100,000 investment today, let's say it goes up to another $200,000 in 10 years, and I say, you know what, it's time to sell, I'm ready to cash out. I take that entire $200,000 and pay 0 taxes on it. Now that's a pretty cool deal. The other great thing about this opportunity is it's easy tax filing. Yes, it has to be a company, but it's simply one form that says, yep, this is an opportunity fund, and each year with your taxes you file this one form. There's no audit, there's no appraisal, there's no complexity to it. It's self-regulated by the investors. Now, before we close, I want to make sure this is clear. This is an opportunity. It's a great way to defer some taxes and eliminate future taxes on an investment in these opportunity zones. But I want to make sure it's in perspective. Financial planning, I always recommend people mitigate risk, limit their risk. Should this be your entire investment? No. But if you've got several investments, you've got a retirement account, you've got other things going on, and you have something that you sold or sell in the next several years, it's a great opportunity to take a piece of your overall net worth, your overall investable assets, and put it into something like this. It's local, it can be national. You could go buy a piece of property down by the coast in Florida, California, wherever you want. And obviously you want to buy a good investment. You don't want this investment just to do nothing, because then you don't really get a tax benefit if it doesn't earn anything. But as a portion of your investment, your net worth, this is a great opportunity for a piece of your investing to be 100% tax-free over the next 10 years. I hope you enjoyed it. I'm Justin Struble with BSG Advisors. I'm not a broker, I'm a fixer.